Welcome back to the Magic Market. Today, we're diving into how Disney's new CEO impacts DIS stock. With recent leadership changes, the future of the Walt Disney Company hangs in the balance. So let's unpack what's happening behind the scenes and what it means for you and your investments. To understand the potential impact of Disney's new CEO, we first need to look at the leadership changes that have taken place. Bob Chapek took over the reins in February 2020, but his tenure faced challenges, including the pandemic's impact on parks and shifts in content distribution. Under Chapek, DIS stock experienced ups and downs, reflecting not just company decisions but also broader market trends. His approach to direct-to-consumer streaming, particularly with Disney+, was initially well-received, but faced scrutiny as subscriber growth plateaued and content strategy came under fire. While Chapek emphasized an aggressive streaming strategy, many felt that traditional media channels were neglected, leading to internal conflict and public criticism. Notably, Chapek faced backlash regarding the decision to release films simultaneously in theaters and on Disney+, a move that angered theater owners and stirred debates about the future of cinema. The controversies escalated, particularly with the public feud between Chapek and Scarlett Johansson over the release of Black Widow, which raised questions about Disney's commitment to its talent. After a tumultuous few years, Bob Iger returned as CEO in November 2022, a move celebrated by many investors. Iger had previously led Disney to great heights, overseeing acquisitions like Pixar, Marvel, and Lucasfilm, which significantly expanded Disney's content library and market presence. His visionary leadership was credited with revitalizing Disney's brand and financial performance, guiding the company through a transformative era in media and entertainment. However, Iger's return was not just a nostalgic trip down memory lane, it marked a critical pivot for Disney as the company faced unprecedented challenges, including the rapid evolution of the streaming landscape and competition from rivals like Netflix, Amazon, and HBO Max. Investors were eager to see how Iger would tackle these issues, especially in light of the aggressive moves made by competitors to capture market share. As Iger reclaims his leadership, we need to consider what his strategic vision will entail this time around and how it will influence DIS stock. With a renewed focus on storytelling, potential reevaluations of the streaming strategy, and an eye toward innovation, the upcoming months could be pivotal in shaping Disney's future and investor confidence. So, what can we expect from Bob Iger's second term? His return has already signaled a significant shift in strategy. One of his primary focuses is to revitalize Disney's content pipeline, particularly in light of recent subscriber losses at Disney+. As we've seen, Disney+ has faced challenges with subscriber retention, experiencing a notable drop that has raised eyebrows among investors and industry analysts. Since Iger's return, he has emphasized a commitment to storytelling and innovation. His goal is to reinstate the emphasis on high-quality content that has historically resonated with audiences of all ages. Iger understands that Disney's strength lies in its storytelling heritage, whether through animated classics, blockbuster films, or beloved franchises. Under his leadership, we can anticipate a push towards leveraging Disney's extensive library and characters in new and exciting ways. For instance, Iger has indicated that Disney will prioritize sequels and spin-offs from successful franchises, while also greenlighting fresh original content. The objective is not only to attract lapsed subscribers, but also to engage a new generation of viewers who are looking for compelling narratives and memorable characters. This approach aims to rekindle the magic that Disney is renowned for, and to ensure that its offerings are not just products, but experiences that resonate deeply with fans. Moreover, Iger's return has brought renewed focus on the theatrical release of films. During his previous tenure, Disney enjoyed massive box office successes, and many believe that Iger will aim to return to that model, particularly as the pandemic's grip loosens and theaters begin to recover. The upcoming slate of films is expected to include both original stories and the continuation of fan-favorite franchises, ensuring that Disney remains a dominant player in the cinematic landscape. But it's not just about content. Iger has also hinted at a comprehensive re-evaluation of the company's operational structure. This could lead to more streamlined decision-making processes that allow for quicker pivots in strategy. For example, the entertainment landscape is changing rapidly, and Disney needs to be agile in its responses, whether it's adjusting release strategies or reallocating resources to more profitable ventures. Additionally, this operational overhaul could mean cutting down on redundancies and improving collaboration between various divisions, such as parks, streaming, and studios. By fostering a more cohesive working environment, Iger aims to boost profitability and enhance the overall effectiveness of the company. This restructuring could also include exploring innovative partnerships and new revenue streams, particularly in the digital space. In essence, Iger's vision is not merely about addressing the current challenges, but positioning Disney for long-term success in a competitive landscape. By focusing on high-quality storytelling, re-establishing strong theatrical releases, and streamlining operations, he aims to reignite investor confidence and align Disney's expansive assets with market demands. Now let's talk numbers. How might Iger's leadership affect DIS stock? Analysts are cautiously optimistic, predicting that a renewed focus on content and operational efficiency could lead to increased revenue streams. This optimism is reflected in various analyst ratings, with some projecting price targets that indicate significant upside potential for DIS stock in the coming years. One of the most critical factors contributing to this outlook is the anticipated recovery of Disney parks and experiences. With Iger back at the helm, investors are hopeful that the parks will continue to bounce back post-pandemic. In 2023, Disney saw an uptick in park attendance as families resumed travel, signaling a return to normalcy. Analysts suggest that as consumer confidence rises and travel restrictions ease, Disney's parks could experience a surge in demand, contributing to substantial revenue growth. Furthermore, the recent rollout of new attractions and experiences, such as the much-anticipated Tron Light Cycle Run and expanded Star Wars-themed offerings, demonstrates Disney's commitment to enhancing guest experiences and attracting visitors back to its parks. These investments in attractions not only create excitement, but also drive higher per capita spending within the parks. Additionally, we can't overlook the potential of Disney's streaming services, particularly Disney+. The service initially saw exponential growth during the pandemic, and under Iger's guidance we can expect a renewed focus on high-quality content that could reinvigorate subscriber growth. Analysts are looking for strategic releases that align with audience interests and cultural trends. Think major franchises like Marvel and Star Wars, which have loyal fan bases eager for new content. Moreover, Iger's history with mergers and acquisitions could pave the way for strategic partnerships or new acquisitions that bolster Disney's competitive edge. For example, discussions around acquiring smaller production companies or content studios could diversify Disney's offerings, allowing it to produce unique content that appeals to various demographics. It's important to note that while the future looks promising, challenges remain. The competition in the streaming space continues to intensify, with rivals like Netflix and Amazon constantly evolving their strategies. Therefore, how Iger positions Disney to respond to this competitive landscape will be crucial. Analysts will be watching closely for any announcements regarding content strategies, pricing models, and partnerships that could reshape Disney's approach to streaming. Overall, Iger's leadership brings a renewed sense of optimism that could significantly impact DIS stock. If he successfully navigates the complexities of both the theme park recovery and the competitive streaming environment, we could see a positive trajectory for Disney's financial performance. The stock market often reacts swiftly to leadership changes, particularly in a company as influential as Disney. Following Iger's return, DIS stock experienced an immediate uptick, reflecting a wave of optimism among investors who remember the strong growth and strategic vision he provided during his previous tenure. This initial surge in DIS stock is indicative of a broader trend where market participants respond positively to familiar leadership, especially someone with a proven track record like Iger. Historically, the market tends to reward companies that exhibit stability and experienced leadership, particularly in uncertain times. Investor sentiment is crucial in this landscape, as Iger navigates a variety of challenges, from fierce competition with streaming giants like Netflix and Amazon, to the recovery of Disney's parks and experiences, how he communicates these strategies to shareholders will be key. For investors, understanding the roadmap that Iger lays out is vital to assessing the future performance of Dia stock. Transparency and clear, measurable goals are essential in fostering greater investor confidence. If Iger can articulate a cohesive vision that addresses both the immediate challenges and long-term strategies, it could help stabilize and potentially boost stock prices even further. Investors are likely looking for clarity on key metrics. What does success look like for Disney Plus in the next year? How quickly can parks return to pre-pandemic attendance levels? What are the plans for new content rollouts? Additionally, analysts are keen to hear about Iger's plans for financial discipline and capital allocation. In past earnings calls, his ability to provide insight into cost management, investments in technology, and resource allocation has been crucial in shaping investor expectations. This time around, expectations are particularly high for clarity regarding how Disney plans to reinvest profits into its core businesses while also exploring new revenue streams. As we watch how Iger's strategies unfold, it's important to remember that market sentiment can be volatile. While optimism is currently buoying DIS stock, any misstep or failure to meet investor expectations could lead to sharp reactions. For instance, if subscriber numbers for Disney Plus do not show a marked improvement, or if park revenues fall short of projections, we could see a dip in stock prices, regardless of the underlying potential of Iger's strategies. Ultimately, the sentiment surrounding DIS stock will hinge not just on the strategies Iger puts in place, but on his ability to effectively communicate those strategies to investors. The next earnings report will be critical in assessing whether the initial optimism translates into sustainable growth and investor confidence. So, what does all this mean for you as an investor? While it's still early to gauge the full impact of Iger's return, the signs point to a strategic shift that could positively influence DIS stock in the long run. With his proven track record of successfully leading Disney through transformative periods, Iger's leadership brings a renewed sense of optimism to both investors and Disney fans. Looking at the potential for a turnaround, several key factors emerge. First and foremost, the focus on revitalizing Disney's content pipeline is crucial. Under Iger, we can expect high-quality storytelling and innovative projects that not only appeal to existing subscribers, but also attract new viewers. The recent subscriber losses at Disney Plus have raised concerns, but if Iger can successfully roll out engaging content, we could see a rebound in subscription numbers that would positively impact revenue streams. Additionally, the recovery of Disney parks and experiences is another critical aspect to watch. Iger's plans to enhance guest experiences through new attractions and immersive offerings are likely to drive significant attendance growth. With more families feeling comfortable traveling and visiting parks, analysts project that Disney could see a return to pre-pandemic revenue levels as the parks bounce back. This resurgence would not only boost overall revenues but also help restore investor confidence in the broader Disney brand. Moreover, as we discussed, Iger's experience with mergers and acquisitions could lead to strategic partnerships that further enhance Disney's market position, whether it's through acquiring niche content creators or forming alliances with tech companies to innovate in the streaming space. These moves could diversify Disney's offerings and fortify its competitive edge in an ever-evolving landscape. However, it's important to remain vigilant. While current market sentiment is positive, any signs of underperformance, be it from missed earnings projections or disappointing content performance, could lead to swift market reactions. Keeping an eye on upcoming earnings reports will be essential. These reports will provide insights into Iger's strategy and its effectiveness in addressing the challenges ahead. Key metrics to focus on will include park attendance figures, Disney Plus subscriber growth, and overall revenue growth across segments. In conclusion, while there are uncertainties ahead, the combination of Iger's leadership, a renewed focus on content quality, and the potential for park recovery create a foundation for optimism. Investors should remain informed and prepared to react to the evolving landscape of the Walt Disney Company. By monitoring the company's strategic decisions and their impact on financial performance, you can make informed decisions that align with your investment goals. Thank you for tuning into The Magic Market. If you found this analysis helpful, don't forget to like, subscribe, and share your thoughts in the comments. What are your predictions for Disney under Iger's leadership? Until next time, keep exploring the magic of the market.